Responsibility accounting is a system of accounting that recognizes various responsibility centers throughout a business organization and reflects the plans and actions of each of these centers by assigning particular revenues and costs to the person who has the pertinent responsibility. Responsibility accounting is an underlying concept of accounting performance measurement systems. The basic idea here is that large, diversified companies are difficult, if not impossible, to manage as a single segment. Therefore, we must decentralize and separate the organization into manageable parts. These manageable parts or segments are referred to as responsibility centers, and they include 1. Cost centers, 2. Profit centers, and 3. Investment centers. This approach allows responsibility to be assigned to the segment managers that have the greatest amount of influence over the key elements to be managed. An underlying concept of responsibility accounting is referred to as controllability. That means conceptually, a manager should only be held responsible for those aspects of the performance that he or she can control. As I stated before, there are usually 3 types of responsibility centers, which are identified as a cost center. Under the cost center, the manager is held responsible only for the costs, which generally include a production department, a maintenance department, human resource department, etc. Next, there are profit centers. Under the profit center, the manager is responsible for all the costs and the revenues the center earns. Here, the manager would have all of the responsibility to make decisions that would affect both the costs as well as revenue. Lastly, there's the investment center. This center, apart from having to look at the profits, it looks at the profits and returns of the funds invested. If we're talking a cost center, a good example in this case would be the janitorial department. If we're looking at a profit center, well, this could be a product line for which the product manager would be responsible for. If we're looking at an investment center, an example here would be a subsidiary entity of the organization. In that subsidiary, the president is held responsible for the costs, the revenues, and the investment made. And this concludes a very quick overview of responsibility accounting.